personal finance segment in Fay, time to get out of gold, time to buy equities. Haven't we discussed that again and again?
But apparently there's a need to tell people several times because there are a lot of investors who are still holding gold ETFs and they're so disappointed.
You know, telling Indians to sell gold is like saying God doesn't exist. So that's never going to happen.
You know, we're not asking you to sell your gold jewelry. We're saying get out of the gold ETF, which is a piece of paper, so you shouldn't be that sentimental about it, hopefully. Let me bring in Dhirendra Kumar, the CEO of Value Research. Dhirendra, thank you so much for joining us. Now, while most equity funds have recovered, those of our viewers who are holding on to gold ETFs or gold fund of funds are still very disappointed. What is your view on gold now going forward, given the performance we've seen over the last 2 months?
I have never believed in gold. I think gold is a stuff of consumption, but last 5-6 years have been very unusual for gold. A lot of things happened in the world which led to a great demand for gold. For example, you know, the global uncertainty which we witnessed for the first time of an unprecedented scale, that led to the myth around gold that it is an asset which never goes down. It's a completely uncorrelated asset and it never goes down in value. And certainly it didn't go down in value at that point. But besides that, I think, you know, gold is an unproductive asset. And the other reason why gold went up was the financialization, you know, the number of gold derivatives and ETFs created world over. That led to an artificial surge, or, you know, a demand which was never there. And that has led to the change in character of gold. But my sense is that gold is a valuable asset, but I don't think it should be bought for appreciation. And it might help, it may or may not help investors preserve their worth. Of course, it will never go down substantially, but at the same time, I think that the character of gold has changed. It has become far more volatile. For the first time, we are witnessing the kind of decline never seen before. Besides that, I think there is another unusual problem in India, that because gold import was a very substantial component of our import basket, government clamped customs duty, and if that goes away, you know, gold prices will go down temporarily. Certainly in the short run, gold has the potential to get impacted by that, and that, I think, is getting reflected in the gold prices. So whatever story was built around gold in the last 4 or 5 years, I think investors will be better off forgetting that whole story. You should have gold. You should have gold in a physical form. Enjoy it. Keep it in the locker. Wear it. Don't think of it as an investment.
But should investors who are holding ETFs continue to hold them in a hope of a price recovery at all, Dhirendra? Or should they be cutting their losses at this point and just getting out?
No, not at all. My sense is that investors will be better off being in productive assets, be into equity, be nominally into fixed income for rebalancing purpose or providing stability to your overall portfolio, and you will be well off keeping away from gold altogether.
Alright, so let's now address those of our viewers who are going to exit the gold ETFs and move their money into equity. Would a Nifty ETF be a better alternative to a gold ETF at this point? Is that something you would recommend?
I think so. If you are unable to choose a good fund, you will be better off with a Nifty ETF. And you would have been much better off compared to, you know, the marginal decline that we see in gold compared to the big surge that we have seen in equity. And that is the story around equity. If you are strict through the bad times, equity proves extremely rewarding.
Alright, so equity instead of gold right now. That's the advice we're getting from Dhirendra. Let's take a few questions. Ravi has written in. He wants to know if he should remain invested in the IDFC Premier Equity Fund. He has other funds like Mirae Blue Chip and Franklin Smaller Companies are doing better right now. Should he get out of IDFC Premier Equity? This is unfortunate because IDFC Premier Equity is such a brilliant fund. It has performed so well. But obviously, the recent performance of mid-caps and small caps has caught some viewers' eyes. What would you say he should do at this point?
Yes, these are outstanding funds, have delivered robust return, you know, substantial returns, and they are very impressive in the category which I would say, you know, small and mid cap fund, or the fund which potentially can deliver substantially higher return in a rising market. So if you are investing for the short run, these are not desirable vehicles because one can actually get caught on the wrong foot with these funds much more. And if you're optimistic about the market, be regular, have your discipline, And these three funds are outstanding funds, potentially can deliver very high return. And they're focused on mid and small cap stocks.
Well, let's take another question. Krishnakant has written in. He would like to put aside 5,000 rupees every month for the next 10 years to buy a house. He wants to know what mutual fund would be a good investment for this time horizon. 5,000 rupees every month for 10 years, Dhirendra. Where should that money go?
For somebody like you, 28-year-old, it's saving to accumulate down payment for your house. I would say get started conservatively, and maybe a larger mid-cap fund or a balanced fund could be a good start. And make sure that you are investing also through the lean time. Some of the good, balanced fund which I listed before was ICICI Prudential Balanced Advantage Fund, or HDFC Balanced Fund, or Tata Balanced Fund. These funds tend to be, a little more stable, and that is very important for an investor like you who is getting started.